Good morning, traders. This is Michael coming to you from GammaEdge on Monday, April 7th with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at our market trend model. This is a zoomed-in version of our market trend model without the filtered cumulative tick, as well as the new highs versus new lows. But as you can imagine, we saw selling on the filtered cumulative tick and new lows significantly outpacing new highs into Friday also. So just a continuation of what we've seen. Looking at this zoomed in market trend model here, we have tag combos. So our market trend model is based on the tick. That's basically just a version of buyers versus sellers, a industry standard of measurement, and then we just add a time component to it to be able to look at an overall market trend. Looking at this bolded CT here, this white line here, basically this is our instantaneous CT. Again, just noting transactions via buyer versus sellers. If it's moving down, obviously there's more selling transactions versus buying transactions. These other three are shorter term moving averages. These just help us identify a trend. And then the colored ribbon is our longer term money positioning. If the red here is significantly below the cyan or anywhere below the cyan, then the overall market trend for a look back period of longer than 30 days, months is in a downtrend. So if there's if the red is below the cyan, then obviously we want to be in cash or very risk off in the overall market, which has been for the past few weeks to months. These bearish cumulative tick conditions, this is what we've produced here at GammaEdge with some back testing, understanding that when these conditions turn on, it is in your best interest to be on the correct side of the market. Obviously, these are significantly bearish tag combos that we identified here. And with the chart here, you can identify what these are indicating. So obviously, if we close below a previous day low, close below all the moving averages, or have some sort of downtrend, then the probability of the continuation in that direction can be correlated to obviously price. This is not a predictive model. This is basically just saying what is happening at this time within the overall buying versus selling in the market. So if you were a bull, then obviously you'd want to, or a bear, you'd want to see the CT continue down from a lower or upper left to lower right, stay below all the moving averages, indicating that sellers are maintaining control of the market. If you're a bear, you'd want to see this bolded CT start to flatten out and then turn back above the moving averages and then start heading up to this colored ribbon. As you've seen previously, historically, once we start moving into this colored ribbon or close to it with the bolded white CT, this is an area where we can see some stalling and previously have seen some failure very quickly. So this is where we become cautious if we've had a multiple day bounce. So again, not seeing any multiple day bounce on the horizon at the moment. Obviously, this can change intraday, but again, just indicating that the sellers are maintaining control of the overall market. Until that changes, we would not be looking for any upside in the overall market. Moving on to the SPX, these basically are the institutional positioning within the overall market. Via the option structure. We like to look at these as these are longer positions, obviously indicated over here, 417. This would be a monthly expiry. So you can see these are monthly expiries and longer term positioning that can be not significantly liquid as institutions position on out in time. Quick reference, we are put dominated. Obviously that means that there is that the put speculators are in control of the overall market, and we have more negative delta and put gamma within the overall structure, as indicated by these larger red boxes here. These red negative net deltas indicate put speculation and in the money puts. We do note this significant level here at 5,000 does have positive net delta, indicating that we do have some call OI here, as indicated by the green check mark, but also a significant amount of put OI here. So we've referenced that area this morning. We've seen that tested multiple times pre-market. If we do get above that area, then again, that could become an area that could provide some positive gamma and supportive type action if we're above it. But again, within the overall context of a put dominated, completely put speculated environment, it will be difficult to move to the upside. But just denoting above that 5,000 could be an area that could possibly become supportive. Again, leading to the possibility that we could see some upside back towards some of these levels to the upside. Net OI up here above us again, just the reference that we're completely put dominated with in the money puts above us. So again, price appreciation to the upside will be very difficult. And then you can study the true zeros, referencing that we'll have to wait this morning for the morning print to adjust this chart. But basically the true zeros just continue to indicate that put speculators are in significant control of the overall market and have been for a extended period of time. We would want to see this start to turn back to the upside and see price start to get above those zeros, indicating that we are balancing out some and that call speculators may be coming into the overall complex on a longer term positioning. Heading to the SPXP, obviously these are our short dated speculation with daily and weekly and monthly expiries. As denoted over here, we have all the expiries turned on. Again, put dominated, significant negative net gex within the overall structure. And then I'll draw your attention to the expected move. Obviously, we're in a highly volatile put dominated negative gamma environment. So the expected move is very outsized. So with this, you will get quick moves back and forth, up and down. Will be difficult to trade directionally wise. So our recommendation is smaller position size, significantly lower time frame, or sit on the sidelines and wait for the overall structure to improve dramatically. Again, overall red negative net delta is indicated here, clear out of the money put dominated. Speculators are still speculating to the downside. Reference that 5,000 level, significant level on the SPXP with all expiries turned on, and no visible transition up here. This tells us that the structure is extremely broken and extremely put dominated. So without any reference points, it is difficult to find your edge within the overall option structure to have levels to trade against. That's why we say we're extremely cautious and prefer to be in cash or sitting on your hands until we see a repair of the overall structure, or at least have some reference points to have some transition levels to trade against. Now, we will get transition levels intraday as the data starts to come in via our EM command, but pre-market, again, is difficult to process out trading plans with a significant gap down and a significant put dominated and really overall broken option structure. Again, we'll be watching for liquidity to fill in below us as this gap down has really offset the option structure heading into the morning. We have forced spot price. That's a command here we have at GammaEdge with a projected open of 49.62. Obviously, that will be variable pre-market, but again, you can see the significant higher sensitivity levels at 4,900, 4,950, and we've referenced that 5,000 over and over. That will be important. Noting the GEX ratio, basically this is a put call ratio where we add a time component, which is gamma to it. Again, as we've discussed, the GEX ratio is extremely stretched to the downside, but can stay extremely stretched if the shorter dated put gamma continues to override the complete complex, which we've seen. And then on any bounce to the upside, like as we have referenced in the past few weeks to months, we did not see a significant price appreciation in the out of the money call speculation, which is the first component you need to see for any price appreciation. And we just maintained below 1, which indicated that shorter dated put gamma and put speculation was overriding the complete complex. SPX P0DTE, we'll head into that right now. Again, put dominated, significant expected move here. And then we have this expiry turned on for today. Being mindful of decreasing gamma width distribution as we approach expiry today. This most likely will be centered around spot price. So we'll watch this gamma distribution. Basically, it is a bell-shaped curve. It will most likely be centered around spot price at the open. So we'll have to update the charts when we get the opening print. Again, understanding that this is extremely low liquidity as the market makers have opened these strikes below us and they have just not filled in yet. So we'll get that data at the open. Implied open down here, 49.65, referencing basically the 5,000 above us. And then if we want to move to the upside, transition is located up here at 51.15 to 51.20. Obviously, that is a significant distance above the projected open. As we said, structure is extremely broken. And we've drawn out some possibility of transition levels at the open. But again, with an extremely broken structure, we would advise just being patient this morning, waiting for the overall book to clear, and then looking at our intraday, which would be our vol M command, indicating where the market participants are positioning with volume. And then we'll get some overall transition and reference points if you feel like you need to trade today. And those will give you some clear if-thens, hopefully heading into the morning. The significant if-then obviously is 5,000, trying to move above that level. That could provide some sort of supportive type action or some sort of rejective type action, which would indicate more weakness to the downside if we see the put speculation filling in very quickly. Delta balance projected with the forced spot price. Obviously, basically, this is just telling you that put speculators are in complete control above and below spot price, with the delta balance down here at -1, and we do not see any significant price improvement throughout the week. So we'll continue to monitor that day over day. This is our EM command. This is basically our intraday command, indicating the highest sensitivity points within the overall option structure, again indicated at 5,000 and 49.50 to the downside. So this will be automated in the morning after we get our first data runs, and then you can run this command also with spot price that will be overlaid, indicating where those high sensitivity gamma delta points will be. So heading into the morning, what is our thesis? Basically, watch and wait, be extremely cautious with the elevated VIX, the elevated expected move. Put dominated negative gamma environment will be highly volatile at the open. Most likely we'll see a significant amount of emotional trading at the open as market participants either opened their brokerage accounts over the weekend or opening them this morning heading in. Fear will be an extreme component that is difficult to quantify at the open. So we'll continue to watch that 5,000 level to the upside. 49.50, I've drawn that. Staying below that, I would anticipate some more weakness. And then we have a low overnight that opened this morning, roughly around 4,800. So again, that may be a key level that we watch into the open. So let's make it a great day. Hopefully that helped everyone this morning. Again, we would encourage everybody hands-off trading today. Unless you have or feel you have a significant edge, which at the moment with the broken option structure is very hard to quantify. So let's just wait, let the dust settle. Let's find our edge, wait for our fat pitch so we can have higher probability trades and setups. We'll be in the Discord in a few minutes. Thanks, everybody.